Okay, let's unpack this. Welcome back to the deep dive, your shortcut to being genuinely well informed. Today, we're taking a stack of sources, mainly this profit model overview a listener sent in, and we're pulling out the key insights for you. We're diving headfirst into Unimex. You've probably heard the name. It's making waves in the digital finance space. Our mission today, to really get under the hood, understand what Unimex is, but also, critically, look at how it's trying to bridge traditional finance TradeFi with this whole new world of Web3. We'll cut through the jargon, figure out what it means for users, for investors, and maybe for the future of finance itself. And hey, if anything we talk about sparks your interest, there's a registration link down in the description. You can check it out, maybe even try some features yourself.
Yeah, and what's truly fascinating here, I think, isn't just like putting old finance ideas online. It's how they're fundamentally trying to reimagine them for this digital age. Unimex is positioning itself right at that intersection. It's trying to build this ecosystem that's powerful, sophisticated, but also, and this is the really tricky part, accessible. Making Web3 easy for regular folks. That's the holy grail, right? Lowering those famously high barriers to entry. It's a huge challenge, but also potentially a massive opportunity. We'll definitely get into that.
Absolutely. That balance is, well, everything. So let's start right at the beginning. The big question. What is Unimex fundamentally? The source material calls it the world's first TradeFi asset trading platform. That's a pretty bold claim, wouldn't you say?
Oh, definitely bold, yeah.
Its core mission sounds huge, too. Lead the TradeFi sector with high-quality assets, seamlessly bring Web2 users into Web3, be a bridge to crypto trading, and just, drive the whole development of digital finance. That's a lot. What does that practically mean for someone, say, managing a traditional portfolio right now, maybe feeling a bit crypto curious?
Well, it means Unimex is trying to speak their language first. That's the key. Instead of throwing blockchain jargon at them like private keys and DAOs and all that, which scares a lot of people off, right? They're focusing on offering access to financial assets that people already understand, stocks, maybe bonds, commodities, things like that.
Okay, so familiarity first.
Exactly. Meet them where they are, offer familiar stuff, but built on this new Web3 infrastructure. So imagine you're that investor. You get stocks, you get bonds. Unimex says, hey, you can trade things like that here, but with blockchain benefits, transparency, maybe better efficiency, new ownership models, it lowers that initial psychological hurdle, makes it feel less like a giant leap into the unknown and more like a gradual step. It's very deliberate, trying to de-risk that first taste of Web3 for a massive audience used to regulated stuff.
Right, and that brings us to how they tackle those barriers we mentioned. This is where it gets really interesting for Web2 users. Unimex talks about seamless connectivity, connecting social, gaming, NFT apps, positioning itself as the go-to place for Web3 newcomers. Now, that sounds great on paper, this integrated approach for mass adoption, but let's push on that a bit. What are the real hurdles? Integrating finance with, say, a fast-paced game or a social feed, that seems complicated.
Oh, it's incredibly complicated. Yeah, you're right to push on that. True seamless integration is the dream, but the reality is tough. The vision is powerful, though. Imagine earning an NFT in a game, right? And then, boom, right there, you can see its value on Unimex, trade it, maybe even use it as collateral without leaving the game interface.
Or getting tipped in crypto on a social platform and managing it instantly.
Exactly. But the hurdles, well, technically you need incredibly robust APIs, SDKs, tools that let these totally different platforms and maybe different blockchains talk to each other reliably and securely. That's a massive engineering lift. And then there's the user experience. You want the finance stuff accessible, but not clunky or intrusive. It has to feel native to the game or the social app.
Sure.
And culturally too, right? Shifting mindset from just entertainment to financial action. If Unimex nails this, truly nails it, they've cracked a huge piece of the Web3 adoption puzzle, embedding finance where people already are. But yeah, execution is everything.
Totally. It has to feel natural, not forced. And speaking of feeling natural, they also highlight instant use without wallet installation and a minimalist interface. Now, that jumped out at me. Instant use without a wallet in Web3, how did that work? And what's the trade-off? Our listeners know that not your keys, not your crypto.
Yeah.
What about control and security here?
Right. You hit the nail on the head. Wallets, seed phrases, gas fees. It's intimidating. It's probably the biggest single turnoff for newcomers. So instant use without wallet installation likely means they're using a custodial model initially.
Yeah.
The platform manages the keys for the user behind the scenes.
Like a regular crypto exchange login.
Pretty much, yeah. Think of logging in with your email and password. Unimex handles the complicated crypto wallet stuff for you. It just works. You don't have to learn about seed phrases right away. The impact on user experience is massive. Zero setup friction. You're in, you're trading almost instantly. Reduces fear, builds confidence. But yeah, the trade-off is custody. Initially, Unimex holds the keys. Now, for our audience, that's a red flag, potentially. But the strategy seems to be get people in the door easily, make it simple, then likely offer pathways to take self-custody later, connect your own wallet once you're comfortable.
So ease of entry first, then education and self-sovereignty later.
That looks like the plan. Prioritize adoption by simplifying that very first step. They're betting that convenience outweighs the initial lack of self-custody for their target Web2 audience. It's a strategic gamble on progressive onboarding.
I can see the appeal. Definitely lowers that initial wall. But Unimex isn't just about being simple. It sounds like it's got some serious financial tools under the hood, too. They mentioned full-stack financial support, order books, liquidity pools, staking, derivatives. Now, our listeners are probably familiar with these in DeFi, but what's the big deal about having all of them on one platform? And how is Unimex trying to make their version unique, especially for those TradeFi folks they're targeting?
Well, having it all in one place is about efficiency and a smoother user journey. You know how it is in DeFi now, right? You hop from a DEX to a lending protocol, maybe another platform for derivatives.
Yeah, it's fragmented, lots of connecting wallets, approving contracts.
Exactly. It can be clunky, sometimes risky. Liquidity gets spread thin. Unimex aims to consolidate all that. So order books give you that traditional exchange feel. Precise orders, price discovery, familiar territory for TradeFi people. Liquidity pools mean instant swaps, making markets work smoothly, especially for newer Web3 assets. Staking is like your high-yield savings account, but Web3 style. Earn passive income, support the network. And derivatives. That unlocks the complex stuff, hedging, speculation tools that sophisticated investors expect.
So the value is convenience and breadth.
That's part of it. Convenience, yes. A single interface, less hopping around, that's huge for Web2 users. But the other part is doing it within this framework that emphasizes security, that banking-grade custody, the regulatory awareness we'll talk more about. It's offering the breadth of DeFi tools, but wrapped in a layer of perceived trust and security that many standalone protocols maybe lack. It's starting to be a place where you can go from a simple trade to complex strategies, all feeling, well, safer and more familiar. That combination aims to attract serious capital.
A unified, secure toolkit. That's powerful.
Yeah.
And then there's this really innovative piece that caught my eye. Unimex is pioneering the integration of live streaming interaction with token launches. They call them ILO's initial live offerings. This isn't just a white paper drop. It sounds much more interactive. How does this blend of live video and fundraising supposed to create synergy? And what problems in like the current IDO or ICO space is it trying to fix?
Yeah, this ILO concept is genuinely interesting. It's a move away from static info dumps towards a real-time dynamic engagement. Think about current token launches, right? Or even old school IPOs. There's often this gap, this information asymmetry. Teams drop a white paper, do maybe a couple of text AMAs.
And you hope you understood it right, hope the team is legit.
Exactly. ILOs aim to change that using live streaming. Imagine the project team, or maybe a CEO of a traditional business tokenizing assets, presenting live, answering questions directly from the audience in real time, showing demos.
So direct access, less filtering.
Precisely. It tackles several key problems. One, the trust gap. Web3 has its share of anonymous teams, rug pulls. Seeing the team live, hearing them speak, asking tough questions that builds trust way more than a PDF ever could. It adds accountability. Two, better due diligence. Investors can ask specific questions right there about the tech, the team's background, market strategy, tokenomics, whatever worries them. Leads to more informed decisions, which is healthier for everyone.
Yeah, cuts through the marketing fluff maybe.
Hopefully. Three, community building. It's not just a transaction, it's an event. People participate, ask questions, feel involved from day one. It helps traditional businesses connect with digital natives too, create synergy. And four, cutting through noise. In a super crowded market, a good live presentation stands out. It's dynamic, conveys passion, makes the launch memorable. It basically turns fundraising into an interactive conversation, building stronger projects and communities right from the start.
Fascinating. A really modern approach to launches. Okay, so Unimex isn't alone. It's part of this bigger ecosystem. Let's talk about Unilive. The source says Unimex is officially incubated, strategically invested in, and fully supported by Unilive. It's a core financial application within that Unilive ecosystem. How crucial is Unimex for actually capturing Uniliv's audience, which sounds mostly content-focused, and turning that attention into real financial activity?
Oh, it's absolutely fundamental. That relationship is the core of their whole strategy, this closed loop idea. Think of Unilive as the engagement engine. It uses short videos, live streams, stuff people are already consuming to build a massive audience interested in Web3, gaming, NFTs, digital culture generally. It generates eyeballs and interest.
Content-driven engagement, as they call it.
Right, but engagement alone doesn't pay the bills, right? That's where Unimex comes in. It's the bridge. Without Unimex, all those viewers on Unilive might just watch and leave. But with Unimex integrated, someone watches a stream about a cool new NFT.
And they can click a button right there to buy it or learn more on Unimex.
Exactly. Or stake a related token, join an ILO for a project featured on Unilive. It provides the immediate action pathway. It turns that passive interest into tangible financial value. Unimex is designed to monetize the attention Unilive generates. It's the financial engine fueled by Unilive content.
Which brings us to this dual helix collaborative ecosystem concept. Unilive does content engagement. Unimex does financial monetization. Can you paint a clearer picture of how these two strands weave together? And stepping back, what's the strategic genius or maybe the risk of tying content so tightly to finance?
The dual helix is a really smart analogy, actually, like DNA, right? Two strands relying on each other. Strand one is Unilive. It's constantly pulling people in, educating them with videos, streams about blockchain basics, NFT reviews, game walkthroughs, interviews. It builds awareness, community, trust.
Generating that initial interest.
Right. Strand 2 is Unimex. It provides the immediate financial tools. Someone gets excited by something on Unilive. Unimex is right there offering the way to trade it, stake it, invest in it. It converts interest into financial action. The genius is the feedback loop. Unilive feeds engaged, somewhat educated users directly into Unimex. As those users potentially succeed financially on Unimex, their stories, their activities can become new content for Unilive, attracting even more users.
A self-reinforcing cycle.
Exactly. User migration, asset liquidity, value amplification, it all feeds itself. Strategically, it's brilliant because it solves that awareness to action gap. People hear about crypto but often don't know how to start. This ecosystem guides them, but the risk? Well, they're tightly linked. If Unilive's content gets stale or fails to attract users, Unimex's user pipeline dries up. Conversely, if Unimex has a security breach or its investments don't perform, that negative sentiment could poison the whole Unilive community. The success of one really depends on the other. High reward, but requires high coordination.
Makes sense. They need both engines firing perfectly. Okay, now let's bring in the heavy hitter from traditional finance, GAT Bank. The source introduces GAT Investment Bank, Limited GAT Money, a regulated investment bank in Labu in Malaysia. Licensed, established in 2021. Global banking, investments across asset classes. And crucially, GAT Bank made a $10 million strategic investment in Unimex.
That feels like more than just money, right? It feels like a major validation.
It's a huge statement. Yeah, absolutely more than just capital. For those Web2 users, the involvement of a regulated bank like GAT addresses major anxieties about legitimacy, security, compliance in Web3. That $10 million isn't just funding. It's a massive signal of confidence from an established, licensed institution. It implies Unimex went through some serious vetting, a level of due diligence many pure crypto projects just don't have. So what does this GAT Bank partnership mean in practical terms for our listeners, for someone using Unimex? The force lists several concrete benefits.
Right, and these are really significant differentiators, hitting directly on user trust and utility. First, and maybe the most critical, comprehensive fund custody. The source is explicit. 100% of user funds are held in segregated GAT bank accounts. Segregated. That means they're separate from Unimex's own money.
Okay, that's huge. No commingling of funds like we've seen cause disasters elsewhere.
Exactly. It brings banking-level security and regulatory oversight. Your assets are protected under banking rules, not just platform promises. That's a massive trust factor for anyone coming from TradeFi. It directly answers a major historical pain point in crypto. Second, this co-branded U-card. This sounds incredibly useful. Spend your on-chain assets offline. Earn crypto on Unimex. Spend it at the grocery store with a card.
That really bridges the gap between digital and real-world spending.
Totally. It makes your digital wealth immediately practical. No complex hoops to jump through just to buy coffee. Third, risk reserve accounts. These are like safety nets managed by GAT Bank. Buffers against market shocks, operational glitches, whatever. Adds financial resilience, protects user funds further. It's proactive risk management. And finally, robust fiat on-off ramps. Easy deposits and withdrawals in major currencies like USD, EUR, etc. This is fundamental for accessibility. GetBank's involvement likely streamlines this, ensuring it's compliant and efficient, makes it easy for anyone, anywhere to get money in and out. So this partnership really tackles those core concerns: security, regulation, usability, by layering traditional banking infrastructure onto Web3 tech. It's aiming for the best of both worlds.
That combination of regulated custody and easy fiat access is definitely compelling. Okay, so we have this whole ecosystem: Unilive for engagement, GetBank for trust, and Rails. Now, what about the fuel for this engine, the UNX token? Let's shift focus there. UNX is the native token, the core bridge for value, connecting users to Web3. It has mechanisms for yield, staking rewards, governance. Seems designed to be pretty central.
It absolutely is. UNX isn't just, a coin to trade. It's designed as a multi-utility token, deeply woven into how the platform works and how users interact with it. The goal is to drive participation and long-term holding. Let's break down the use cases. First, trading fee discounts. Pretty straightforward. Hold UNX, pay lower fees when you trade. For active traders, this adds up fast. It incentivizes holding UNX, creating steady demand.
Makes sense. Rewards activity and loyalty.
Exactly. Second, staking incentives. Users can lock up their UNX stake it or provide liquidity to trading pools. In return, they earn more UNX. This isn't just free money, it's crucial. Stakers help secure the network or provide the liquidity needed for smooth trading. They're actively contributing to the ecosystem's health and getting rewarded for it. Creates that participation cycle.
So earning by supporting the platform.
Right. Third, governance and ILO participation. This is key for the Web3 ethos. Holding UNX gives you a vote. You can help decide on platform upgrades, new features, how resources are used. Plus, holders might get special access or better terms for those initial live offerings we talked about. So holding UNX means having influence and opportunity, not just potential financial return. It empowers the community.
Giving the users a real stake in the platform's future.
Precisely. And finally, social payments. Using UNX for tipping streamers on Unilive, maybe buying digital goods within that ecosystem. This takes UNX beyond just finance. It becomes a token for social interaction too, broadening its appeal and utility, creating demand from non-traders as well. Integrates it into daily digital life on Unilive. All these uses work together to create multiple reasons to acquire, hold, and use UNX.
That's a pretty comprehensive set of utilities. Now let's look at the tokenomics, the big picture, total supply. 1 billion UNX. How's that broken down? And what does the allocation tell us about their priorities, growth, community, stability?
Okay, the allocation looks carefully planned to balance different needs. The biggest slice, 60%, 600 to 1 UNX, is for the mining pool. That's huge. It signals a major commitment to rewarding participation staking, liquidity mining, maybe other future programs. It means a large chunk of tokens will be distributed over time to active community members. Decentralized growth.
So rewarding the users who actually build the ecosystem.
Exactly. Then 20%, 200 UNX for institutional investors. This shows they've secured significant backing. But crucially, these tokens unlock linearly over 60 months. 5 years. That long vesting period is vital. It prevents big investors from dumping tokens early and crashing the price, shows they're in it for the long haul, provides market stability.
Okay, that's smart. Avoids early shocks.
Very. Next, 7%, 70 UNX for the Market Foundation. This is basically the ecosystem growth fund, marketing, partnerships, exchange listings, maybe market making to ensure smooth trading, keeps the ecosystem healthy and growing. The team gets 5%, 50 UNX, seems reasonable, aligns their incentives with the platform's long-term success, usually vested too. Another 5%, 50 UNX for the holding yield program. This specifically funds the rewards for long-term holders, which we'll get to, directly incentivizes holding. And finally, 3%, 30 UNX for initial liquidity. Absolutely essential to get trading started smoothly on exchanges, ensures there's a market from day one.
Wow, okay. So it looks like a thoughtful mix, big chunk for community rewards, solid institutional backing with controls, funds for growth, team incentives, and initial stability. Seems designed for the long game.
Yeah, it appears to be a very deliberate structure aiming for sustainable growth, balancing all the key stakeholder interests.
You mentioned that holding yield program getting 5%. Let's dig into that. It's called the holding yield mechanism, aiming to incentivize long-term holding and co-building. It uses a jump rank reverse weighted algorithm. Sounds fancy. How does that actually work? And how does it try to be fair to both big and small holders, unlike some simple staking systems?
Right. It's definitely more nuanced than just stake more, earn more proportionally. First off, the participation requirement is pretty low, just 200 UNX. So lots of people can join, not just whales. The clever part is that power calculation algorithm. Instead of pure linear rewards where the biggest fish get the vast majority, this reverse-weighted approach subtly adjusts things. Think of it like this. Yes, bigger holders still earn more in total UNX, but the percentage yield they get relative to their stake might be slightly less than a purely proportional system, while smaller, significant holders might get a slightly better percentage yield than their stake alone would dictate.
So kind of compresses the reward range a bit, helps the middle and lower tiers.
Exactly. It aims to prevent the absolute largest holders from completely dominating the yield pool. It fosters broader participation by making sure smaller holders still get meaningful rewards. This plays out in the holding segmentation. The top holding segment gets 60% of the daily yield pool, the mid holding segment gets 30%, and the lowest holding segment gets 10%. While the top gets the most, that weighted algorithm within the tiers means the distribution within those segments is fairer. The mid and lowest tiers still get a significant motivating slice of the pie. Strategically, this is about retention across the board. Keep everyone engaged, reward loyalty consistently, build a more stable, decentralized community less reliant on just a few massive holders. It's a smart way to balance incentives.
That's a fascinating approach to yield distribution. Definitely seems geared towards building a broader base of committed holders. Okay, let's shift gears to more direct investment products offered on Unimex. This is where it gets really interesting for folks looking at structured opportunities. They have the Cornerstone plan, backed by GAT Bank, aiming for banking-grade standards with 3 core dimensions. And just a reminder, if you want to actually see these plans after we discuss them, the registration link is in the description below. You can sign up and explore.
Right. This Cornerstone plan really embodies that hybrid TradeFi Web3 model Unimex is pushing. The trinity of deep integration boils down to 3 pillars that should resonate with traditional investors. First, fund security. This is huge. The source says user assets are held independently by Currency Cloud, a UK payment institution. And this is key. Currency Cloud was bought by Visa in 2021.
Visa. Okay, that's a household name in secure payments.
Exactly. So your funds are plugged into Visa's global compliance network. We're talking end-to-end transparency, top-tier security, rigorous compliance. It's not just Unimex saying we're secure. It's leveraging the infrastructure of a global payment giant. This massively mitigates risks like platform hacks or insolvency compared to many standalone protocols. It's a level of regulated external custody that's almost unheard of in early-stage Web3. Huge trust builder.
Wow. Okay, security locked down by Visa's network. What are the other 2 dimensions?
Second is return potential. Obviously, security is job one, but it still needs to offer attractive returns. The plan is designed to generate yield, likely drawing from the ecosystem's activities, trading fees, staking, maybe ILO revenues. And third is regulatory compliance. They're making a point of operating within established frameworks, partnering with regulated entities like GAT Bank, using compliance-focused providers like Currency Cloud Visa. This proactive stance in regulation is crucial for attracting serious investors wary of crypto's gray areas. It's really about mixing Web3 innovation with traditional financial safeguards, trying to set a higher bar for asset management in this space.
That emphasis on security via Visa is definitely a powerful differentiator. Now, within this Cornerstone plan, there's the multiplier arc. It's called the Static Yield Growth Plan. The description is quite poetic, a vessel of trust and value, bridging real-world returns and future vision, navigate through cycles. Okay, nice marketing. Let's get specific. High yields in crypto always raise eyebrows, right? What are the actual reported yields for the multiplier arc levels, and what should listeners critically consider about how sustainable these might be?
Absolutely essential question. Always scrutinize high yields. So the multiplier arc aims for stable, predictable returns. Its settlement mechanism uses a currency standard. This likely means your yield is calculated based on a stable value like USD, but paid out in UNX tokens. So you know the value you're earning daily, even if UNX price moves. Transparency is key here. They claim income is clearly visible and rules are transparent. Now, the staking levels and yields reported in the source. Rising Star, stake all 100 UNX for 30 days. Reported yield, 12% monthly. That's 144% annualized. Accessible entry point, Elite. Stake all 1,000 UNX for 90 days. Reported yield, 15% monthly. 180% annualized. Veteran, stake all 1,000 UNX for 380 days. Reported yield, 19% monthly. 228% annualized. Excellent. Stake all 5,000 UNX for 360 days. Reported yield, 25% monthly. That's 300% annualized.
Those are very high numbers, especially the annualized ones.
They are indeed. Now, some crucial notes. Yield is calculated in Unimex tokens, and here's a key feature, a 10% burn mechanism on earnings. 10% of the Unimex you earn is automatically burned, removed from supply. This is designed to counteract inflation from the yield payouts and support the token price. Also, earnings are paid out frequently every 8 hours, 3 times a day. Provides that constant feedback loop of rewards.
Okay, but the sustainability question, 300% APY. Where does that realistically come from long term?
That's the million-dollar question, isn't it? Is this yield primarily funded by releasing new tokens from that big mining pool allocation? Or is it significantly backed by real revenue? The platform generates trading fees, ILO success fees, maybe service charges from Unilyze or Gap bank integrations. A healthy system needs real economic activity generating revenue to back rewards, not just token emissions. The burn mechanism helps manage the supply side, which is good. But investors should always dig into the source of the yield. High APYs often rely heavily on new money coming in or high token emissions, which might not be sustainable forever. Understanding the underlying economic engine is critical for assessing the true risk-reward here.
Right, always look under the hood. That burn on earnings is an interesting sustainability feature, though.
Right.
Okay, beyond the multiplier arc static yield, there's a singularity ladder. This sounds more dynamic, progressive path. Combines dynamic rewards with growth incentives, multiple benefits as levels rise, growing with contribution and collaboration. Sounds like it taps into network effects, maybe referral structures.
It definitely leans heavily into community building and network growth, yeah. It looks like a structured referral or multi-level marketing MLM type of system adapted for Web3. It incentivizes users to not just invest passively, but to actively bring others into the Unimex ecosystem. The benefits are designed to reward this activity. Difference. Bonus. As you climb the ladder, U0 to U8, the bonus percentage you earn from your referrals activities increases, motivates climbing ranks, organization subsidy, special rewards for building and supporting your team or downline, platform incentives, general rewards for contributing value in various ways, staking, referring, maybe content creation eventually. The core idea is rewarding active contribution to growth. Growth is limitless, returns infinitely expand. It's motivational language for network builders.
Can you give us a feel for the structure? Like, how do you climb from U0 to, say, U4?
Sure. The chart shows a clear progression. U0 is the start, just need to stake Unimex worth at least $100 USD. To get to U1, you need to refer 1U, and your team, direct and indirect referrals, needs to have staked a total equivalent to 10,000 UNX. You then get 20% differential income on their activity plus a 12% subsidy. U2 needs you to help 2 people reach U1 plus 25,000 UNX team performance. Income share jumps to 35%, subsidy to 15%. It keeps climbing. U4 needs 3 U3s under you, 225,000 UNX performance, gives 56% differential income, 9% subsidy, goes all the way to U8 requiring massive team performance, 33 million UNX, and developing 4 U7 leaders. Offers 80% differential income.
Wow, quite structured. Any catches or special rules?
2 important notes from the source. The performance requirements, like that 10,000 UNX for U1, are dynamically adjusted based on UNX market price. That's smart, keeps targets achievable if the price drops, or appropriately challenging if it moons. Even if someone you referred reaches the same level as you or even surpasses you, you still get a 15% reward from their activity. This keeps people motivated to refer even top performers.
Okay, so it's a detailed system, clearly designed to drive network growth aggressively. Rewards activity, rewards building teams. But like any referral model, its long-term health depends on the underlying product being valuable, right? Not just the incentive structure itself.
Absolutely. The core Unimex platform, the trading, the staking, the ILOs that needs to deliver real value. The singularity ladder can turbocharge growth, but it needs a solid foundation to build upon. Otherwise, it risks becoming unsustainable if it's only about recruitment.
Understood. Okay, we've covered the ecosystem, the token, the investment plans. Let's talk long-term value preservation for UNX. With all these rewards and growth plans, how does Unimex plan to keep the token valuable? This brings us back to the multidimensional burn mechanism. You mentioned the 10% burn on staking yield. What else are they doing to manage supply and create that healthy cycle? This is so crucial.
It really is. A good burn strategy is vital for long-term token health. Unimex seems to have a 3-pronged approach here, aiming for constant deflationary pressure. First, the ecological transaction fee direct burn. Remember the 5% fee on every UNX sell transaction? 2.5% of that fee goes to market incentives, okay? But the other 2.5% is directly burned, permanently removed. This means every time someone sells UNX, the total supply shrinks just a little bit. It's a constant automatic deflationary pressure built into trading itself, strengthens scarcity over time.
So selling actually helps reduce supply. Interesting.
Yeah, it's counterintuitive but effective. Second, that staking fee dual mechanism we discussed. That 10% burn on all staking yield earned via the multiplier arc. Again, directly removing tokens generated as rewards, making the yield system itself contribute to deflation.
Right. Offsetting the inflation from rewards.
Yeah, precisely. And third, platform buyback and burn. This is more proactive. Unimex plans to use a portion of its actual platform revenue generated from trading fees, ILOs, other services to periodically go into the market, buy UNX tokens, and then burn them. This directly links the platform's business success to reducing the token supply. More revenue means bigger buybacks, stronger burns. It creates a powerful feedback loop supporting token value.
So burns from selling, burns from staking rewards, and burns funded by platform profits. That's quite comprehensive.
It is. It aims to create that virtuous cycle. More trading, stronger burning. It systematically reinforces scarcity and provides a strong argument for the token's long-term investment case, assuming the platform achieves adoption and generates revenue. And if you're finding this breakdown useful, do give this deep dive a like and subscribe for more analyses like this. Also, for more community discussion and maybe quicker answers, check out the Unimex Telegram and WhatsApp groups, links probably on their site, or maybe discoverable via that registration link in our description.
Good points. Okay, tying this together, the source even included a UNX 36-month target price chart. Starts at 0.05 cents, project's growth. Of course, these are just targets, heavily dependent on execution and market conditions, but it shows ambition. And that ambition is really clear in the final piece, the ecological panorama. This is their roadmap, a glimpse into a much bigger future Unimex envisions.
Yeah, that panorama is incredibly broad. It shows they're not just thinking about a trading platform, but a whole Web3 universe. Just picking out a few highlights, they mention a launch pad, their own Unimex chain, a Unidex decentralized exchange, suggesting ambitions for building their own core infrastructure. That's a massive step towards independence and tailored performance.
Building their own blockchain. Wow.
Yeah, big undertaking. Then things like an AI trading assistant, an AI personalized asset allocation. Using AI to give users smarter tools, personalized guidance, that could be huge for democratizing sophisticated finance. Also, things like a Web3 social protocol, a Web3 education platform. It really covers finance, social, education, infrastructure.
It sounds like they want to be the all-encompassing portal for Web3 life almost.
That seems to be the vision, connected to the bigger picture. It demonstrates a really ambitious long-term plan for an integrated ecosystem. Continuous innovation, aiming to be a one-stop shop. Whether they can execute on all of it remains to be seen, but the vision is definitely expansive.
Absolutely. Okay, let's try and bring this all together. We've covered a lot of ground today on Unimex. We started with its core idea, being that bridge, making Web3 accessible for Web2 users via familiar TradeFi concepts, but with Web3 benefits. We looked at the ecosystem, Unilime driving engagement, Gate Bank, bringing crucial banking security and regulatory legitimacy, that Visa Current SciCloud custody piece. We dove into the UNX token, its utilities, its carefully structured tokenomics, and those interesting yield and holding mechanisms designed for fairness and retention. We examined the investment plans, multiplier arc static yield with burns, singularity ladders dynamic growth incentives, and finally those multi-dimensional burn mechanisms aiming for long-term value, plus that huge future vision in the ecological panorama. So what it all seems to point towards is an attempt to build a seamless, secure, potentially rewarding way to engage with digital finance, wrapped in a layer of familiarity and trust that might appeal beyond the usual crypto crowd.
It really does. And this whole exploration, I think, raises a really important question for you, the listener, to ponder. How are platforms like Unimex fundamentally changing the game? They're not just putting finance online, they're actively blending the security norms of traditional finance with the innovation and community aspects of Web3. They're merging content, community, and finance in ways we haven't really seen before at this scale. So the provocative thought is this. As more of our financial and social lives intertwine online, how will these integrated ecosystems redefine what it even means to be financially literate or financially engaged in the future? Will navigating these complex blended platforms become a core skill? It's something to think about as this space continues to evolve so rapidly.